We had a friendly trade today in crude oil. We had a couple things working in our favor. We did have the dollar back off after making some new highs for the month. One of the things we were talking about this morning was the Trans-Alaska pipeline. That's shut right now, only running at about 5% capacity with no restart date at this point in sight. You know, at this point, it's hard to think that it's going to last for maybe 4 to 5 days, but you know, we'll see what the government wants to see before they give the approval. Just to give you an idea of what type of production that is, we're running at 5%. Our average barrel per day production out of that pipeline is 630,000. So at 5% capacity, we're losing about 3 million barrels per week at this rate. So we could probably expect next week we're going to have a little bit of a friendlier inventory data, but again, we know why. We've also got some cold weather that's beefing up our heating oil demand. The government's expecting that to be about 10.5% above normal for total heating demand this week because of colder temperatures. So one thing, again, here on the continuous crude oil chart, you can see that we are still in an uptrend. Nothing has changed there. This thing has been trending higher very nicely since we covered from the 2008 lows. And last week we did have an outside week down. We did close below the prior week's low, so that may give us a little bit of pressure to this chart technically if this short-term fundamental story cannot spark a little bit more buying here. We are looking to sell the nearby February crude oil on a stop if we take out Friday's low. So we're going to sell at 87.20 on a stop, and we're going to look for a very quick move within the next few days if that happens to test the support at $85 a barrel. On entry, we're going to have our stop at 89.50, which is just above this day's high. That high was at 89.48. And again, there's a lot of talk that we're going to see $100 crude and much higher prices at the pump, but we do feel that we're going to see a deeper correction here to some better support and spring off of that before running to $100 immediately. On the dollar index, this market's had a very strong start to 2011, but overall we are still in a sideways range. It looks like if we get a couple decent closes over 82, that'll make 85 look like a very achievable target, and vice versa. If we get some solid closes below 79, that's going to make a retest of the 76 lows look very achievable. This market is still trending higher from these lows that we put in back in November, so if we're going to pick a direction to trade from, we're still going to be looking at buying dips more than selling rallies. And we're anxiously waiting to see if we can take out this resistance of 82, and that could be part of the process of getting this crude oil to correct back to some deeper support.